What's going on, guys? Ryan the Freighter's here, and I'm going to break down to you guys how to use the Harmonic Scanner to the best of its ability. Okay, I've been testing it for a couple weeks now, the ins and outs, and lots of people have been inconsistent with it. So I'm pretty much going to go step by step on how to use this thing and, again, make the most amount of money, be the most productive with it. So, first of all, you got to trash the 5-minute and the 15-minute time frames, okay? I just don't use it at all. Even the 1 hour time frames, like I'll show you right here, AUDCAD, right? The 1 hour time frame, I barely use that. I use that more of an entry, more or less. So what I mean is that I'll only use the 1 hour if it's in conjunction with the 4 hour and the daily. But just for that as a signal, I don't know. I'm kind of iffy on it, but it does pay out, as you see, like right here. It does. But me personally, I like basing it off the 4 hour and the daily. Why? Because the higher time frames are definitely more solid and more probable. All right, and the whole thing with trading is you want to take low risk, high reward trades. Okay, you want to have the best probability and chances of making money when it comes to the market. You're not trying to gamble. You're not trying to make it 50-50, right? You're trying to make money and take the best probable setups. So let me go through like an example with NZDJPY. So this is on a day chart, guys, right? And it paints a nice bat structure. Now, when you're looking at an entry, you see this bat structure and it's on a daily chart. You know it's probably going to continue to go up. It probably painted early, probably down here somewhere. Now, your entry zone, even though it says like up here or it stops up here, my personal entry would be like right here. Okay, that's what I'm looking for. Why? Because the resistance zone is right here, guys, right up here. That's what I'm looking for. All right, you want to align the harmonic pattern with a very strong resistance or support level in the markets on the higher time frames, and that will execute you a really solid entry. So let's say you got in like right here. You would obviously put your stop loss above here, which would be anywhere, let's say from here to here, a good 100 pips. Let's say 80, let's just say 80 pips, okay, just to round it up. So you're risking 80 pips, that'd be your stop loss, to potentially net 350 pips to 500 pips. Okay, so I do that all day long. So you're telling me you're going to risk 80 to potentially win 35, 50 for 500 pips? You know what I mean? Like, risk 80 to potentially win 500. Sounds like a good risk to reward ratio to me, right? So that's the way you got to look at this, guys, is risk to reward ratio and execute solid entries. Again, let me go into like another example. Let's go to NZD, or no, I just went that one. USDJPY. This is on the hour chart, right? See how ugly this looks? There's really no type of resistance zone in the market. I mean, a little bit down here, right? But I don't like it. I don't like it. But I go on the 4 hour chart, NZDUSD, and this is a deep bat pattern. It's like, not bad, but definitely not ideal, not perfect, not clear cut. So obviously there is a lot of resistance, a little bit, I would say not even a lot, a little bit kind of right here, right? Maybe a little bit right here. Maybe this is a solid entry. I would say this is probably the best entry, which it did hit that point and start to reverse. You zoom in a little bit, see right there. So if you would have caught that up there, let's just say you got in a little late down here, you would have banked at least 100 good pips, okay? So even though this isn't the most ideal setup, you still would have made money. Now again, when you're using harmonic patterns, you have to also make your own analysis on the market. You have to use it in conjunction with your own analysis. You don't just take a trade because the harmonic painted, all right? Or you don't just hit a sell because, oh my God, it's extended and hit the resistance line, I'm going to make a sell. No, you have to also make sure that's in line with your own basic market analysis. All right, guys, so you can't forget this. This is a tool and resource to help you with your confirmation, with your entries, everything. But don't just base your trade solely off of this. But it is an enhancer, okay? So this isn't too good example. That's like a mediocre trade. So let me go to, let's try this one, AUDCAD, right? So again, I have this line that I drew, all right, and here's the entry up here somewhere. Now this would be the best possible entry, okay? This one right here. Why? Because it's aligned with this resistance zone right here. Look, right there, right there. That's where you want to buy or sell. I'm sorry, right? So as I drew, right, I drew this line. You know, you want it to bounce off, and then you take a nice sell in that zone somewhere, and it would hit the take profit 1 or the take profit 2. Okay, and then your stop would probably be up here. So you're risking, again, you'd be risking 70, let's just round it up, 80 pips to potentially net and gain 200 pips to 300 pips. So you're risking 80 to potentially make 200 to 300. So, you know, it's a good 3 to 1, 4 to 1 risk ratio, right? So all you have to do is accommodate, make sure your risk is you're risking a good percent of your account, 2, 3, 4, 5%, whatever it is for you. You know, you're not over leveraging your account, obviously, because that's to be able to handle a crazy swing, you know, a good 50, 60, 70 pip swing. So you want a low volume order. But again, if you have low volume, and even if 2, 3 cents, guys, and it catches 200, 300, 400 pips, it's money. That's money, okay? Good money. So that's another example of where to get in and what to look for. Let me try another example. NZDCAD. This is the daily chart. Let's zoom out a little bit. You can't really see it too much. Okay, so all right, so this isn't bad. Okay, this entry isn't bad, which is the entry I'm talking about is right here. This entry where it says the most ideal entry probably would have been down here, though. That would have been beautiful. So around this area right here would have been a very, very nice buy zone, right? Because again, you want to look for that strong resistance or support area, but this actually isn't bad at all, given because of the support zone right here, and then it came back. You know, the harmonic painted. If you would have probably looked at the 15-minute chart for a nice solid entry, you probably could have looked at it and seen something possibly. So I'm just giving you guys examples of what could happen. Okay. What else? What's a good example? Let me go to another one. So this is AUDNZD. This is perfect right here. This is like perfect. Okay, this is perfect because once it completed the pattern, you have this resistance zone down here, right? Right? That is what you're looking for. And then your stop would probably be somewhere up here. I mean, it says it up there, but mine would probably be more like up here. So more up here somewhere, depending. You know, to this next resistance zone. So that would be like from here to here is a good 200 pip swing. So you got to remember, if that's a 200 pip swing, you got to do a very, very small order. So this is, but it's a 200 pip swing to possibly net 36 or 350 to 400 to even 600, 700 pips as you see it jumping. So if you would have caught it early, maybe on the first dip from here to here, boom, you would have net 400 pips. You know what I mean? Or from here to here, another 400. So you could have just got in and got out. You don't have to kept holding it. Right? Even if you would have got in up here, from here to here, it's good 300 pips. Right? Or here to here, boom, 300 pips. You know what I mean? 400 pips. So you don't have to continuously hold, you know, forever. But that's what you would look for. That is the ideal setup that you would look for. Again, this is a nice setup right here. This is beautiful because you have this strong resistance zone, and it hits it, boom, And also you'd look at your own market analysis for this trade. This is AUDJPY, and then boom, you know, you'd be money. You'd be money. You like, you know, just your stop will probably be up here to that next resistance zone. You measure that. That's a good 200 pip swing to potentially make 500 to 900. So a good 2 to 3 to 1 risk to reward ratio. And that's all we're cared about. We don't care about how many pips we're risking. We're worried about how many pips can we potentially make off this. That's what you always want to worry about. So again, guys, I'll go in depth with, you know, all the extra stuff, but this is how to mainly use the scanner. And the way I've been using it, I see honestly the best way to use it. The best way to use it is to control it. Be patient. Don't rush it just because it paints, because you also got to remember it takes time. Definitely takes a lot of time for it to hit that zone, especially if you're on the 4 hour or daily. It's going to take time for it to hit those zones. Okay, so just don't rush it. Okay, take your time and make sure that you have your own analysis and that it hits those zones. Okay, so that's all, guys, pretty much. You know, I don't know what else to say here. But yeah, like I said, okay, there you go. My computer is freezing on me. But yeah, like I said, guys, any more questions, anything, just hit me up. Make sure to like, subscribe to the YouTube page, so once I make more videos, you're alerted and you can see it firsthand. So again, guys, take care. Peace.